Stock markets are tumbling globally, with Japanese shares at one point exceeding their 1987 Black Monday loss, while European shares near six-month lows. Our next report decodes the fears of a US recession, sending investors fleeing to avoid the risks.
It's Black Monday all over again. World markets are in the red as fears of a US recession grip investors. European markets are at a six-month low. The Nikkei 225 plummets 12.4%, wiping out all gains for the year and plunging into negative territory. This seismic shock emanating from Japan echoes across Asian and European markets, devastating financial markets. The recent Bank of Japan decision to raise interest rate to its highest in 15 years is being linked to the turmoil.
The retail Japanese investors were at 18-year high of borrowing at very cheap rates and investing into the stock market. So that $30 billion margin calls is happening right now in Japan, and we have seen the markets going down by a very sharp 20% over the last 1 week.
The catalyst for this market meltdown? A storm of disappointing US economic data. Friday's jobs report delivered a gut punch to investor confidence, revealing a meager addition of 114,000 jobs last month. The rising unemployment and lackluster factory data have stoked fears that the Federal Reserve's aggressive interest rate hikes may have pushed the economy to the brink of recession.
Rate hike in the Bank of Japan, which of course is a bit worrisome to some of the investors and pushing them to unwind some of the trade. So when you see such a big drop in the Japanese market and the US market, that has no question about affecting some of the other related market in the region as well.
Tech giants, once the darlings of Wall Street, bore the brunt of the sell-off. Heavyweights like Amazon, Microsoft, and Nvidia saw their stocks plummet as investors questioned if the rally in recent months was a case of irrational exuberance. The SAM rule, a recession indicator that measures unemployment trends, has been triggered, further fueling pessimism. This technical signal suggests the US economy may already be in the early stages of a downturn. The contagion has spread far beyond equities. Cryptocurrencies, led by Bitcoin, have nosedived, shedding over 10% of value as investors flee to perceived safe havens. Investors and analysts are grappling with the sobering reality. The global economy is standing on far shakier ground than anticipated. The coming days will be crucial in determining if it is a temporary correction or a signal for a more profound economic crisis. Bureau Report, WION World is One.
And for more on this, we earlier spoke to Mark Brolin, who's a geopolitical strategist, author, and economist from London. And this is what he had to say about the markets.
We are very soon going to experience a bit of a bounce back, not all the way back, but I think some historical perspective is quite useful here, because markets have been historically very high and they're bouncing back now to pre-summer levels. So that's still a very high, actually a high indices all over the world are actually still quite high. So I think what we are experiencing as well is a rebalancing of assets, moving away from some of the stocks mentioned earlier, like Nvidia and Apple, and since these stocks historically have also gone very well for a long time, I think some of the big sort of legendary investors, like famously Warren Buffett, is recouping investments. So he halved his shares famously, for example, in Apple. So he's recovering this, he's realizing the profit, and I think he will soon, after the market turmoil has gone down a bit, I think he will start investing in something else, perhaps smaller stocks. So I think the big stocks have had a good run for a long time, and it's actually quite healthy that we're seeing now some sort of rebalancing.
For all the latest news, download the WION app and subscribe to our YouTube channel.